Have you ever wondered what is really driving the price? Why the market reversing despite the technical analysis your guru posted in his paid group? Why did you get stopped again and the price goes in the right direction, just leaving you behind? Watch this video till the end to learn how the market works and what really drives the price. This is the first lesson of the Smart Money educational series. I will show you everything you're about to hear on real chart examples, so you can see that smart money strategy is much easier to utilize than the classical technical analysis. My goal is to give you an understanding on how the market going to develop in the short and long term. So when you master this concept, your profitability as a trader will increase drastically. You will know how to find low risk and high probability entries, also where to set your stop loss and how to fix the profit. Now let's get straight to the point. There are two pillars of the smart money concept: imbalance and liquidity. Now we're gonna jump to Bitcoin chart to show you how that works, but firstly you need to keep in mind this. The price falls or rises not because there are more sellers than buyers or vice versa. Also, not because of pressure from buyers or sellers. Supply and demand do not play a special role here either. Retail traders do not impact the price. Only the large capital controls the price movement. As I mentioned before, we need to focus on two things: imbalance. Market algorithms always strive to balance the price effectively, and liquidity. Smart capital needs liquidity to fill its huge orders and to raise stop losses to get this liquidity. These two things act as a magnet for the price. Let's briefly talk about what imbalance is. Imbalance is a three candlestick formation that show us there was inefficiency between buyers and sellers. I am not diving deep right now on this because I will release a separate video on imbalance soon, so subscribe and turn on notifications. I recommend you watch it because it's the foundation you can go further without. What does classical technical analysis teach us? The first, to hide stop losses behind significant highs or lows, and the second, to enter the position on level breakouts and to hope the price goes in your favor. This leads to the accumulation of large amounts of orders. That's obvious to me, that is obvious for you, and that is obvious for banks and large capital. So, they take advantage of retail traders in order to fulfill their orders on your stop losses and limit orders. Problem is that money not printing from nowhere. For a big player to build a large, long or short position, someone needs to buy or sell him the necessary volume. They cannot just buy through the market order because they pump or dump the price. So they move the price in the opposite direction you expect to grab stop losses and limit orders of retail traders and fulfill their position at your expense. After this manipulation, they move the price in the right direction. In this educational series, I'll teach you how to understand the market and how to spot tricks of big players so you can easily open profitable positions. Now let's jump to real chart examples and you will see the smart money concept really works and you can check it yourself. This is Bitcoin daily chart. Let's take a look at this price range. We see that in early June the market was bearish. Here we have a powerful price drop that took the liquidity of this equal low, and also from this and from this. It is difficult to figure out why the price reversed here. As a TA says, the previous significant low after its breakout should be a resistance level, and we should expect a retracement to the area of this level. But what we have here? The price turned around earlier. Do you want to know why? It's simple. During this bearish expansion, an imbalance was created. I knew that the price would reach this area when we were trading here. Now let's take a look at how this retracement was created. We have seen rising highs and lows. Price was making an upward move to trick retail traders. Where do you think they put their stop losses? That's right, behind all these lows. Therefore, trendline liquidity in the form of stop losses of weak market participants was created during this movement. What happened in the imbalance area? Here we see the manipulation of the highs. Time after time, the price was grabbing the liquidity behind these highs, knocking out the stops of uninformed market participants who tried to short early. At the same time, smart capital, performing such manipulation in the imbalance area, filled its short orders, and after it filled the necessary volume, we saw the final small upward movement followed by a rapid downtrend movement. That was a cascade activation of stop losses of those who were tricked into long positions by previous upward movement. Let's move forward. Here we also observe a sharp impulse movement during which a new imbalance was created, and it happened again. The market again collected the stops of the participants that were behind each of these highs, and again the price was algorithmically delivered to the zone of imbalance where price reversed. Then everyone was taken down again by a sharp impulse movement during which the next imbalance was formed. After that we had a local range where at the top and the bottom rest tons of liquidity. Then we see another manipulation where the liquidity of these equal highs was taken. This imbalance was almost completely fulfilled. Again, we see the price reversing in the imbalance zone and then a sharp downtrend expansion. The stop losses that rested behind each of these lows became the fuel for such a rapid fall. This is also trending liquidity. When low or high are close to each other, they usually cascade and the price movement like a snowball develops sharply and rapidly. What we exactly just seen on the chart. I think the most attentive of you have already noticed that there is a bearish imbalance forming again. If you're a beginner, it might be difficult to find imbalances on the chart, so I recommend you using indicators to train your eye. You can add them on Tradingview. It will automatically light up imbalances on your chart. You will find indicators I use on my Telegram channel. I post a lot of useful trading life hacks that are not available on YouTube. Also, I publish frequent cryptocurrency market reviews, coin analytics absolutely for free. Link will be in the description. You probably have a question. There is imbalance and there is liquidity. Today I learned that they act as a magnet for the price. Can I just set a limit order in the area of imbalance and wait till my order is fulfilled? Sometimes it might work, but soon I will publish a separate video on how imbalances work and how you can combine them with other tools. Long story short, the imbalance cannot act as an independent trading tool, because it is not sufficient to utilize it as a high probability reversal area. You will need to take into account additional elements such as an order block, breaker block, mitigation block, and the candle wick pattern. These tools are an important part of the smart money concept. In the future educational series, I will uncover all these topics in the separate videos, so you learn how to combine correctly these powerful tools in order to predict the price reversal. Don't forget to subscribe to my channel and turn on notifications. For me, the smart money concept is the best type of analysis. It has always worked and will work in the future because that is how the market designed. The price movement is delivered by the algorithms and it always going to fulfill imbalance zones and grab liquidity to fuel the expansion. This will repeat over and over again. If you have specific topic you want me to shoot a video about, just leave it in the comment section. If your comment comment get enough likes, I will shoot a video about it. Also, your comments, your likes and subscriptions motivates me to shoot new videos, so feel free to leave your feedback. Good luck and trade wisely!